Hello everybody, welcome. As I promised that I'm going to show you how I analyze the market so to find high probability setups. Last night I had a very challenging session with you guys because I didn't have network, so I think I'll just try to make this video very brief so that you can be able to repeat it, watch it again and again until you master this thing. It's very simple. I'm just gonna use one pair, one currency pair, USD ZAR, from um, from the from the swingers to the day traders and until the scalpers. So why am I doing this? Is because I'm trying to show you that you can use this strategy on every pair, on every time frame, and any type of trader you are, you can use the same strategy. Okay, so this is what you identify first as a swing scalper. It's a monthly time frame. You go and check your structure, what's going on here. The market is trending up on the monthly time frame, so you mark your zones. This is how you mark your zones. This is how I do it, and I will show you how to find high probability setups. Okay, you see the market is moving up. Every time it comes to this point here, to this trend line, it bounces off. Just like here right now, you can see what's going on there. What's going on there is that the market is already showing that it's bouncing off already. Here it has a bullish candlestick. It's bullish, so it shows that it wants to move all the way to the upside. But then I'm going to show you something else. On my strategy, there's a thing that we call 1, 2, 3. First touch here. There's a first touch here because it also bounces from here on the trend line, bounces here, and then it bounced also there. So this is the second touch, this is the third touch. So when we have such a structure, what we do, we know that we usually say that, okay, when the market does this, we usually look for a reversal patterns from the third touch at the top of the uptrend. At the top of the uptrend, we usually look for a reversal. Okay, and then we'll go to a weekly. Now that we have our main structure and a trend, this is what we'll be looking for. We go to a weekly time frame. Weekly time frame shows us, check out the nature's theory. Nature's theory says the market moves in 3 forms: 1, 2, 3. So this, if you check on the patterns that I sent you last night, it's a bullish flag. This is an impulse, this is a correction, and this is an impulse. So this is just how it moves. Whenever you go into the market, you will always find this type of move. If you don't have this type of move, you don't have to trade. If you don't have a setup like this, you don't have to trade. So what am I seeing here? I see that when this market bounced off here, what did we find? We found this move here, this impulse, and then we found this correction, and then we had what? A bullish flag. Why do we say it's a bullish flag? Because it's facing upwards. The impulse went up. If the impulse goes down like this, then we can have a what? A bearish flag. you can have a bearish flag. But if the impulse is up like that, then we have a bull flag. So what are we looking for? We're looking for bulls to go up, just like here. It's a bullish flag. You can check on your chat patterns, the ones that I sent you. You will find this consistently. You will always find it. Always, you will find it. Then after this happened, we saw, okay, here's a structure here. It formed, okay. So there's always structure within structure. This is the bigger time frame structure, monthly, and then this is the weekly, okay. So this was our third touch. This is our third touch. And then always, whenever you draw your lines, your trend lines, you must always have at least 2 bounces of that price action, and you must not force it. Just draw 2 lines from from where 2 touches from where the price bounced off, and then if price respects that trend line, and if that trend line is valid, you will see it bouncing off like this one here, and this one here. You will see it respected. But if your lines are not valid, you will see they'll be invalidated. They'll just break. Okay. So on the weekly, what do we see? We have that structure, and then what we focus on the strategy is the recent price action. Okay, the most recent price action. When we go to a daily, we will not focus on this part anymore. We will go right here to find out what's going on right now. What is the price telling us right now? So we don't have to look what's going on here. No, we don't need this part now. We don't focus on that. Now what we focus on is what's going on here. Okay, we had an impulse, and then when the price came down to touch here, okay, let me just remove these. When the price came down to touch this point here, when price came down to touch this point here, it came down from an impulsive move, this impulse. It came down in a corrective manner. A corrective manner means, like in other strategies they say it's a pullback, but this one is corrective because it is going down, trickling down. It is not forceful like this one. You see, this one, there was a lot of force here going up in a impulsive manner, but this one here was coming down here in a corrective manner. So which gives us a high probability trade. If you put your buys here and then you go up with it, there's a high chance that you're going to reach the targets, of which this here will be your first target, this here will be your second target, and your third target will be your trend line. Okay, so this is a high probability trade, and I will show you how to find opportunities to make money on this trade. This is a live market, by the way. It's a live market. If you like, you can go in and check for probability trades. Okay, let's go to a daily. So we'll go to a daily. If you don't find how to draw here, just go to a lower time frame to find points where you will be able to trade, to draw your lines. So here we are. Here we are. This is a daily time frame. This is still for swingers. Okay, swing traders. So that's the first point. Second point. Okay, all right. So I will tell you what's going on here. I will tell you what's going on here, and why do we have price overlap, this trend line overlapping, or price overlapping. I will tell you what's going on, because you see, there's traders who don't know how to identify trading opportunities, and who don't know how to not go into some trades, because the brokers sometimes they trap us, the traders. Sometimes the market itself, the big guys who move the market, they trap us. Ne? So you need to be very careful. Okay, that's, I have a first point here. I have 2 points. You see that? 1, 2. Oh, I have the first point here. I have my second point here, and then I'm just moving with it. Then I have my third point right here. Did you see that? No, I have my third point right here. So I'm not trying to force anything. If it doesn't happen, it doesn't happen. It's not my problem. It's the structure. So I have my third point here. Then I'll remove this line here so that I have a cleaner structure. But before I do that, I want to show you something which you may not see, or which your mentors may not show you. You see this line is broken here. Why is this line broken if the structure was supposed to bounce on the line and go up? Why is it broken? It's because they're trying to trap the retail traders. You and I are retail traders, né? They're trying to trap you so that you think, no, it's still going down, it's still going down, you're still gonna sell. Once you put your sells here, then the market turns around and hits your stop loss. Maybe what's gonna happen is that it's gonna bounce off this trend line here and then go down now. So those who place buys here already, it's going to hit their stop loss with the sell here. Check it out in a couple of weeks. You will see something. If it doesn't break this area here, it's going to come back down to hit the stop losses of those who bought here early, the early buyers. Those who buy early, because you don't wait. That is why patience. Né? You must always apply patience. If you don't have patience, you will see such moves here where they break and then you start selling and then it goes up immediately after you sell. It goes up against you to hit your stop loss, and then when you buy, it comes back down like this. Then you wonder what's going on. The market is against you. Why is it always? It's like they see you, they're waiting for you to place a trade. Once you place a trade, they go hit your stop loss. No, they don't care about you. They just want your money, because they know that's what you're going to do, because you are impatient for the structure to develop, né? And then, okay, all right, let me just try and be quick because this video is taking much longer than I thought. So I'm just going to remove this line so that we use the current price action. Then you go for the trading opportunities. Okay, for the trading opportunities, this is what you're going to do. You're just going to wait for price to get here. If it doesn't, it's okay. You find opportunities to go down and sell, because this is a trend line. You apply the trend line strategy. If that doesn't happen, if it breaks here, what you wait for is a retest and then you buy. That's it. But what I want you to do is to firstly identify the trend lines, be able to identify the buying opportunities and the selling opportunities, the structure. Okay, you have the structure here. Okay, you have the structure here. You have the structure here. This is what I want you to identify. Okay, so yeah, and then you have this one here as a reversal pattern. Okay, okay, let me just a moment. We have this one here. As a reversal pattern. Okay, and then this one as well. Yeah. What is this? This is a falling wedge. Okay, check it out. It's a falling wedge. Falling wedge says price must, when it breaks, it must go all the way up. What happened? It did. Ne? Go and check out for a falling wedge. And this is a downtrend. This is a falling wedge. Go and check it out on your charts. Ne? I showed you the bullish, uh, the bullish, the bullish flag and the falling wedge. Those are this falling wedge is a reversal pattern, and then the bullish flag is a continuation pattern. So go and check it out. Okay,